365, shake my hand, everybody, and welcome to another video with me, Leroy James, my series head trader of 365 Trading Academy, institutional supply and demand. In today's video, we are going to be looking at the EURCAD. We're going to be looking at EURCAD, and I thought I'd just start off by checking out what our fellow brothers and sisters are doing in the retail space, right? So if I come to EURCAD here, I find this quite interesting. I don't know if they're right or wrong. We'll do a full breakdown right now and find out. But you can see that most retail traders are actually extremely short on the EURCAD. They are selling the EURCAD like nobody's business, right? They are really, about 93% of retail traders are really short, about 2,195 lot sizes to the downside. And that accounts to almost 7,945 positions, and only 7% are long on EURCAD. When we're looking at market sentiment, by the way, especially data like this, we're really looking at specific time frames, right, or timeline. So we're looking at a EURCAD being short for the next week, right, for a few days to 1 or 2 weeks, give or take. And that's because the retail trader's perspective on price is extremely short term, like extremely short term, right? So this is what we have, right? They are short. Let's see what we find, right? Remember, I am always happy when my perspective is contrarian, right? Part of my trading strategy or a massive characteristic of supply and demand is being contrarian. Sometimes there's alignment, sometimes we sell because banks are selling and retail traders happen to be right at that moment. But most of the time, really, when retail traders are selling, I want to be buying. When retail traders are buying, I want to be selling, right? Because there's always liquidity in the market that retail traders fall for. There's poor strategies, lack of focus, lack of rule, lack of discipline, all these things that account for having retail traders on the wrong side of the table. I'm not saying that's the case today. We're going to look at this together. I'm doing all these videos, and every time I look at an asset, it's the very first time I'm looking with you in 2023, right? So I don't know where EURCAD is right now, but let's quickly have a look. Don't forget, link somewhere down in the description if you want to join us and learn how we do things, right? So I'm going to open up EURCAD, and then we're going to see, you know, what's going to happen this coming week. We're going to see, you know, how right retail traders are, and if we agree with them, right? So the last video that I put together for you guys was pound JPY. Please do check that out on the channel, and you know, let me know how that goes, right? So here's EURCAD. Let's go to our 2023 analysis, right? So 2023 analysis, and I'm saying 2023 because this is the chart. This is last year's chart. If you go through the channel, I showed you that we're building up liquidity, that we're going to break out of this. I did a very short video on the channel. I'm on my YouTube channel right now. If you subscribe, just go back to it. I use EURCAD as one of our. We're looking at the scenario analysis videos. It was Euro USD EURCAD that we're looking at, where I showed you how they build up liquidity using support and resistance, bring up market manipulation, and then poof, price is gone, right? And you can see markets have been breaking out since September last year and really moving, right? So what I do have here is a couple of things, right? Number one, these highs were taken out, right? So continuous structure to the upside, right? That's fine. And now markets seem to have arrived at significant supplies. That's all I can tell you, right? From this perspective, on the daily. And if I swatch this chart a little bit, just to give us better perspective. This has just been a massive reversal, right? August, the fourth financial quarter of 2022 has been a beautiful market reversal for the selling that we did together most of last year, right? And so now we've got about 93% of retail traders starting to sell here, and it looks solid. It looks like it makes sense in the short term, right? But let's break EURCAD down from the absolute beginning, right? right? I'm talking taking her back all the way back. This is Saxo. Let's go to ICE. I've been using ICE broker a lot for these type of videos. And just so you know, I'm talking about long wave analysis. I'm talking about mapping out trades between April 2023 to April 2024 because banks move in 3 months. They think about price in a 3 months target. Take profit in 1 year in a 10-year span. If you don't know what that is, then you definitely need to hit that link down below, right, and learn about these markets properly, right? So I'm looking at price here from about 1979, right? And I can tell you right now there's been a major turning point, a supply that has really been in control since 1995. I was 5 years old in 1995. I was actually studying grade 1 in 1995. I was an early starter for whatever reason. And my old man just threw me in school ASAP, right? So 1995, no, 1995, I turned 5 in December, so I was going to grade 2 the following year, actually, come to think of it. Right, so this is it. This is what we have in front of us. We've got this incredible display of a demand in 1984, then 10 years later in 1995, banks take profit 1 year, move in a 10-year structure. So after 10 years, they start to reduce these things, and price has just been flirting about. So that's 1995 all the way there. In the next 10 years was 2005. They create a bearish engulfing pattern. Then I'm looking for another 10 years. 2005 will be 2015. Somewhere here, continuation pattern. You can see a bullish engulfing pattern is created another 10 years, and then 2015 plus 10 years is 2025, and we're not yet there right now. Right? So where is price going? Well, that's interesting to note, right? On the big time frame, right, you can see there's some type of liquidity grab happening here. Historically, this is probably a massive area of support, or a massive psychological bias area, right? But the way to better view it is, well, since markets left at demand in 1984, which you can see here, right? Markets went to a supply, and then since then, markets have kind of just created a eventually, price has to, like, markets can sure come back here first if they want to, but right now the controlling factor in price to the supply, and we need a matching strong economic way to a demand. When will this happen? I don't know. When we're old and gray, it will depend, right? But a much more cleaner analysis, looking at areas of values that closely affect price in the now, would point out a couple of things. Number one, from about 2018, price has really been trying to create a cluster of continued sell zones. So right there on my 1 year chart, remember this 1 year chart means every single candlestick represents 1 year. Why do we look at these big time frames? Because as much as you like to say trend is your friend, that means absolutely nothing to your trading if you don't understand who on earth is creating the trend, right? You have to understand this, right? So we've got a bearish engulfing pattern, a retest of that zone, another bearish engulfing pattern, and price coming back for a deeper retest. That is all I can tell you right now about this price. I could try and draw a very silly structure trend line that would look something like this. I say silly because it's on this type of time frame is extremely relevant right now, at least right now for the moment, right? But you can see today where market psychologically leaving a major turning point supply stop price there, creating another stop price there, and this is where price is going. So what you want to see about 9 months, a year from now, right? This candlestick here, we're in the month of April, right? This is literally the 12-month candlestick, but in the month of April. That means it's still about 8 months before this candlestick, this one green candlestick, will close. Will it close above here, right? Will price go up or will price come down? You can see already a week. You can see that markets have created a wick already, right? It doesn't mean anything yet because this candlestick is not yet closed. But there's the potential opening of a green bullish candle here in year 2020, 23, right? And price is moving up, right? So we expect some type of, formality to be respected in this big supply block here. And if it doesn't, then we can start to talk about a change of character in price, overall, right? But this is an overall sell profile asset, right? It's been gliding down for the longest of times. But let's get more clarity. That's the 3 months chart. That is the the whole benefit of having the 3 months chart. The 3 months chart is what we call our presidential outlook within the academy. And in some of these terms, I might forget to explain them on the YouTube videos, but they are well explained, and the orders, the rules of these areas of values are given perfectly in our course. So don't forget to check out that link down below. This is also a good chart to start drawing your Excel spreadsheet, back test sheet. Right, and just kind of like have a look at what's going on here long term, right? So where retail traders are looking at for price here, right? So this has been the one thing that keeps slow price depth again in 2022, price depth again in 2015, price depth and broke this area in 2012, and then historically accepted. This is such a big psychological level for this asset, right? Assets like this remembers certain things, right? So we don't want to trade at these levels anymore. And the reason for that is markets kind of like made this very clear, right? Like markets broke this zone. And it's incredibly interesting that last year in July 2022, markets resuscitated to the upside. In fact, if I was to tighten this broken demand zone and only look at the final zone that broke the area of value, that might give me a better indication of what's going on, right? So if I forget about it broken by this turning point here or 2012, it seems, then I can start to better understand exactly what's going on here, right? You can see another order block really fully traded, markets go a little bit deep, hitting that area of competition, and now we expect to see price coming down if they arrive. On the 3 months time frame, the only supply, the only available supply is still within this cluster. There is no other supply there. But what we find very interesting, and I hope you do too, is how parabolic price is. There's no distribution on this chart on the 3 months time frame. That can become a problem if that pattern is also significant on the monthly and weekly, right? Because then that means there really are some incredible buy orders supporting price here, right? But in terms of supplies, we can switch to a Kinihashi if we want. We're going to get, a very similar thing. So I'm just going to put a horizontal right here and see if it makes sense for this to become my proximal line or my entry point if I was trading from a positional perspective, right? Okay, it does actually make sense, right? And then you can still see, you can still get your clean imbalance, you still get your high points. So the 3 months chart adjustment would look something like this. So this is really what we are chasing. We're chasing price, leaving a 3 month demand, right? And markets are extremely parabolic, and markets are slowly approaching a new supply. So we're in the second financial quarter, which will end in June, I think, April, May, June, right? So in the third financial quarter, July, right, will we start to see price having arrived at this area? And in the third and fourth financial quarter, will we see something like this, right? This is a very big question, interesting question, and most likely something that's bound to happen. I can draw a very untidy trend line here as well. This is just started, and so this supply is feeling more and more valid, right? It's just something to wait for over time, right? Now on the monthly time frame, let me see if there's a need for me to tighten my trend line, right? Clean upward battle for the last, this is like 2012, price came back in 2015, price came back again in 2017. Every 2 years, price see this to big time loop, and then every 2 years, 15, 17, 19, right? And then eventually on the second, another 2 years, 19 to 21, markets break, create a supply. Let me zoom in for you. Create a supply, retest that downward trend line, and then markets fall. So where price is right now, price is at the supply below the supply, right? Price is the supply that was big enough where they had to add more sell orders to break the bulls back, right? They could break the bulls back here. And that's where price is on the governing time frame. And on the governing time frame, this particular supply that I've just shown you is not necessarily in alignment. It might be in alignment with this downward trend, but it's out of sequence, right? Because it's not a nested zone. Nested zones are so important. It's when you have a bodyguard, where someone has your back, where you know for a fact that if I sell as the governor, the presidential chart will support me, and the entire weight of the banking system will support me on the 12 months chart. And this is absolutely very important. Governing time frames is crucially important for our trading. But we can see that although we are in a beautiful supply, right? Markets have come back, right? So markets were here in January 2023, markets were in February 2023, and twice price was given the opportunity to fall. But because of this parabolic structure that I warned you guys about on the 3 months chart, because of this parabolic structure, the pushing of the bulls, right? You can see that markets have been stubborn. January, February, March, we cannot make one financial quarter. Banks think in 3 months. There's a decision to uphold the long supply, and here's the people here filling this long, right? So we can't ignore that. We are in a supply. We also can't ignore the fact that markets are a little bit abrasive. We also can't ignore the fact that this could qualify later on as a demand zone. This could qualify. In fact, it does. It's just not an attractive demand zone, right? Because you don't want your demand zone kissing, literally French kissing your supply zone, right? This is literally PDA, right? We don't want to see this type of PDA or on our charts, right? This is incredibly disheartening for a trade. Like I can't take a buy here. I'm leaving market green, so you see it when this supply is not yet broken, right? But when this supply becomes, when this supply gets removed, and then we need to see what the bulls are going to do, because all you have now is this little zone in here, a psychological trend line, and then if the bears can't hold it, price will drop. Bears can't hold this, price will drop, right? So let's drop down to the weekly, right? So I'm struggling to come up with a much more succinct approach. I'm going to delete this right now just so I can get to the heart of the matter. The weekly now, I'm going to try and narrow it down. We're now within a weekly supply, clean weekly supply, fresh touch. Fresh touch consolidation around the weekly supply, annoying, right? Not only that, but you see that the month of January, February, March kept creating these weekly demands. And these weekly demands is why we saw, price not leave that supply, right? Why we saw price really hang tight onto that supply. And that's part of the problem, right? And there we go. Last week, Friday, the end of last week, Friday, which was the third week of April, markets really showed up with a bullish engulfing pattern, shooting straight back into the supply, bullish engulfing pattern back into the supply. And while this is a very valid supply, as long as price keeps banging on it, right, we're going to have what we call class effect, which we teach in our module 1, where areas of value become weaker and weaker and weaker based on the type of contact they're having. I want to quickly map out the weekly zone, right, in alignment with the actual supply that broke price, that broke this upward trend line here on our left, right? So this whole trend line that we draw on the monthly chart. I really want to narrow this down. So if we do that now on the weekly time frame, and this is basically multiple time frame analysis. I've got like 4 lectures on this on the module 1. Like I think each lecture is about an hour each. You need to understand multiple time frame analysis. Right, so now that this is clean, we can see that this was problem number 1. It took a lot of sell orders and a lot of takes to actually get this downtrend going. This 2022, 2021, 2022 downtrend that we wrote last year. It took a lot of sell orders to get that, right? Remember, as much as we want to see a drop, base drop, right? For a valid supply, as said in model 2, we also want to be very careful how many times price will revisit that particular area. So now that we know that this was a very big trade, we also know that this type of eagerness, to come in here, right? But on the weekly time frame, when you narrow it down, you actually get a zone within a zone. This is also very possible, right, on the weekly time frame. And this is probably, depending on what indicators you're using, what trading strategies you're using, what supply and demand, perspective, what's your RSI saying, oversold, or whatever it is, right? This is probably why a lot of retail traders are ready to start selling. Like 93%, I think was what we said, right? Almost, if I remember correctly, almost 2,195 lots are going short here. And that's because, for the most part, this really looks like an easy trend setter. But I am worried about the logic. Remember, once we figure out the trend according to our trading, and once we figure out areas of value according to our trading, once we figure out everything that we need to, we still have one more important rule to place a trade. The risk and reward ratio must be met. So I now know all things to do with trade. I know what supplies and charge, but can I make money? Just because the trade mechanically fits, is it worthy enough for me to take the type of risk that would ensure that this time next year I'm still trading? And every single trade that I take, that you take, should always have that big question answered. How do you answer such a question? Well, if I'm spending $1 on a trade, I need to make a minimum of $3 back. I can't have a 1-to-1. If I take a sell here, where is my take profit? Does my take profit cover the capital, the swap, the commission times 3, so that I can cover my cost of doing business while growing my capital, so that the next time I take a trade and I am wrong, I know that the costs are already covered by some previous good trades. Risk to reward ratio. And right now, I'm struggling to answer that question. Why? Because even if you sell here, we've got this whole cluster of demand. This is a better demand. The distance is better. But for that, we have to take a step demand here, break for you, for you to take profit all the way down there. I don't know. It's possible. For me, it's not a very clear trade. Finally, on the daily time frame, I know what I'm looking for. Price is literally in confluence. This is a weekly supply within a monthly supply, all right? And these two supplies are below a higher supply, a 3-month supply to this whole big area. The psychological part of the trend line is also doing wonders for the sell side. If I come to the daily time frame, really trying to trace what happened here, you can see as price was breaking, the bullish trend line, this long trend line that we drew from 2012 or whatever, right? With a mini supply put in where price pushed up 365 students, right? You see why complicated 365 candles are so important. They create that counter trend, which allows price to push price just high enough so they can start selling again, right? It's a very important thing. Remember, these banks are trading buying currency or selling currency units. Remember, they're using massive, massive volume. So 2 days of pumping price up is worth it if you're going to sell again, sell all the way here and take profit. That's absolutely worth it. Pump price again and close all your sales from up here all the way down a little bit higher to what? The original supply, or not original, but a fresher supply all the way there. That will teach you to look out for in module 1. So if I can just draw this out, right? I'm just picking out supplies, folks, that have very valid areas of value based on our trading rules, right? And I know charts can get messy zone upon zone. I'm just going to make this a little bit white so that it is, visible, so that it's a little bit visible and charts are not too clustered. So look at this. Market simply come back here. If you go to a Kinashi, I bet you there's a long enough wick somewhere in this area here. Oh wow, there isn't any. Even better. Well, not better, but let's see. So the order block is a little bit higher here on the Kinihashi candlesticks, and then the Doji candles width would be slightly lower. Yeah, so a person like me, if I was trading this asset and I was using these classes, I might have price would have left without me. Where you put your pin order set, but then price doesn't tag you in. That's what would have happened to me if I was in my Kinihashi on this particular chart. I love our Kinihashi candlesticks. They always give, most of the time anyways, for me, the type of clarity that I need. On normal candlesticks, the area of competition, area of value would have been tight here. So this would really have been dealer's choice, right? Just how tight you draw your, like they might have been missed. But the logic is there. It's clean supply, order blocks, price don't come back to the lower selling point. Price always go to a higher selling point, just above the trend line. Markets go up, get higher orders, and really break. If you adjust the weekly supply now to this next supply, you get one chance. You miss it, you miss the fresh touch, markets move without you, right? There we go. Breakout structure to the downside, markets come back for the retest. This is all module one. You miss the fresh touch, it's fine. Price will come back for the retest always. And when the retest comes, like I said in 2020, please know it will rip. It will be a big ripper, right? So markets come in, markets keep trying to bang in the supply. I'm tightening these areas of value now for the daily so that we can see. Remember, all of this is sell zones on the weekly, right? I just want you to be with me, right? Really understand where price is going. And if you watch this video on time, where is price going this week, right? So now that we know that the historical sells are a little bit higher, they're in these yellow zones. We now look at where price is today. I'm making this video for you on the 23rd of April, which is a Sunday, right? So, we are a few hours before the markets open again, right? So markets are struggling with a supply here. It's not a bullish engulfing supply. It's not a safety supply. It's not the type of supply you want to take to your mama. It's a valid supply. It's a good girl, but is it really wiping material type of supply? This is the type of questions you have to ask yourself as a trader, right? And whatever gender, just flip it. It's just I like having conversations about myself. Is this supply good for my future? Look how parabolic I am. Like right. Look at this. Very parabolic. No distribution. And why would this parabolic stance of price gives me worries, right? So, and then the bigger problem that I have with that particular supply I've just shown you, right? The bigger problem that I have with it is, don't forget, that is where every single Jack and Jill who went up the hill is waiting. Every single retail trader is waiting there. And I'm just going to pull it up for you. That's why the screen is blank, right? Don't forget this. Don't forget this. 93% of retail traders are short. There's over 2,195 lots of shorts there. Over 7,945 positions. Compile COT data for me. Please hold 3 to 4 weeks when you do that and see the difference. Are the banks increasing their shorts or increasing their longs? Don't worry about what the retail traders are doing. No. The question here is, what are the banks doing? What are the banks doing? If you don't know how to read COT and you can't find my old videos, there's a video on my channel. It's called Master COT something. I'll put it up. I don't know. You just find it, but I'll do my best to try and put it up if I remember in the editing stage here. Master COT data. Go to the channel and then search within the channel. Master COT data. You'll find that video. What are the banks doing? I don't know. All right. This is my first time back in the markets. I'm going through structure first, and I'm going to go through COT with you in the war rooms next year in May. Well, next month in May. But this is dangerous. So retail traders are come here to sell this week. And I'm seeing crazy parabolic structure. If the selling pressure works and banks are okay with it, then that's fine, right? Then all selling should go up until here. Stop here. And to me, by the way, if you're a risk taker, this looks like a slightly okay place to sell, right? Maybe you get 1:2. Yeah, and for 1:2. All right, this is 1:1.7, right? Again, some traders like that stuff. I'm more for 1:3 type of guy, but drawing this like this doesn't mean the price is going to respect it. Do you understand? You don't just draw a projection and say, yeah, I'm going to hold till there. You can't hold until then, because you have to answer the question, what about this demand? Like, what are you going to do when price gets there? Price might bounce there. So you're busy trying to hold a sell, then all of a sudden, before you know it, you're up $100, and now markets are going back against you. What I would do 9 out of 10 times when I get to a zone like this is I would ignore it. I would ignore a zone like this. 9 out of 10 times, parabolic, outside of nested zone, markets really been buying since the beginning of the year. Markets have been buying, typically speaking, since the second financial quarter of 2020-22. I would be looking to get a better sell. So what I would like to do is for all these retail traders who are selling to sell as hard as you can on Monday, sell as hard as you can on Tuesday. I want markets to trap you guys, take you guys, give you a little bit of profits, and then somewhere here, or if I'm lucky, even there I buy there, and we wipe you out with 1 or 2 candles, right? That to me would be more ideal. So I'm marking this area as a cowboy area, not a great idea selling place. This area here where price is right now. Yes, the supply is fresh. Yes, this, yes, that. But take the course holistically. Just because you have a fresh supply does not mean all your rules have been met when it comes to multiple time frame analysis, which is the putting it together part of module 1. So please take that part of the course seriously, and I'll see you again for another video. Just so we're clear, just so we're crystal clear, if I am to sell, I'm not saying that I will, but if I was to sell gun to my head, I would rather risk it all at a proximal line that looks something like this. I would rather sell it 1,4958. The distal would be within a zone, so that's quite trouble. Number one. Number two, all right, we've got this supply here, which gives us freshish cluster, and prices only coming back for the first time here, right? But price has been here historically quite a lot, so it's not really the best selling chart of the year, but it's definitely selling up here is better than selling where price is right now. I guarantee. I guarantee that aligning yourself with the rest of the world retail traders. Oh my God, let me share the chart. I'm not sharing the chart. I apologize, viewers. I apologize. I apologize. If you hated that mistake, please don't forget to like the video so I know you hated that mistake. Uh, right, there we go. So this is what I was saying, folks. Do not. Oh no, do what you want. I will not be selling here. This is that area of value here we're talking about for about a minute. Fresh area of value. I will not be selling here. I will not be selling here. I'll much more rather wait for this yellow zone here. So then I said I'm going to draw a proximal line. You couldn't see because I wasn't sharing my screen. And this is what I drew out at 1,4958. It's a technically, not the best supply in the world, but it's for me, it's 10 times better than the supply. Even if the supply works, send me screenshots of how well it worked for you. I don't care. I will overall in time go with the rules than take a chance and gamble. So this could work for you this week. For me, even if it works, I don't care. I'd never take such unnested zones against such parabolics. What they're gonna do is maybe Monday might open up with a red candle, right? Because you gotta believe in something. Gotta believe in something. This is what they do to trap you. They give you a red candle on Monday, maybe they even give you a red candle on Tuesday. So now you're selling, right? But all price is doing is now doing a buyer's tracing, because remember this is such a parabolic structure. And boom, here comes Tuesday, Wednesday, Thursday, who knows? And all of a sudden, all your positions are taken out. And then, like most retail traders are taught, don't worry about a thing. Markets retest. So let it do the retesting. And boom, before you know it, area of value completely removed. Stop losses are hit, and now trading is a scam. This is something you absolutely have to consider when you're trading. Compare the areas of value, compare who's in control. Remember, retail traders don't own the markets, don't control the markets, cannot manipulate the markets. And if none of that is clear, hit that link down below, join 365, and I'll see you in the next video. 365. Peace.